The Financial Services Commission unveiled its corporate value-up program in late February with the aim of reinvigorating Korea's stock market policies to encourage companies to improve capital management and corporate governance. And some measures being considered include preferential treatment and tax policies for companies that strengthen market value and increase shareholder returns. And the regulator will also introduce an index of firms with strong shareholder value. But some analysts have expressed disappointment about the plan. So how effective do you expect these measures to be in boosting the Korean market's attractiveness?
Yes, I think this is a huge, and it could be a historical reform for Korea's capital market. I think I'm actually pretty exciting about the measures, and I do seeing that the real intention behind that is really to enhance the capital market in Korea, to improve the efficiency of the corporate governance, which will ultimately result in a better practice and also increase the transparency. I think that's what the market has been hoping and waiting for quite long. But I also understand where the major disappointment or the frustration comes from. As if you going through all this press release, and you can really tell that the authorities, they have repeatedly emphasized that this is a self-driven action or self-driven effort, which meaning that the corporate is no compulsory or commitment for these corporates to follow. And there's no even a deadline for to what extent they have to review what sort of plan for value up the corporate practice. So I think what the market really concerned about now is that to what extent or to what percentage we can really see all these measures to be put into the practice and deliver the result that the markets really want. I think putting aside on that, I think there's still quite a lot of uncertainty there, but just purely on what has been presented at this stage, I think it will be effective, but the key for that is the execution of all this.
Financial authorities have argued that they already made some improvements to foreign investors' access to Korean capital markets, and one such move is the abolishment of a requirement for foreigners to register with authorities in order to trade shares of companies listed in Korea. So how do you evaluate these efforts so far?
Yes, I think definitely lowering the entry barrier for the foreign capitals is definitely a good start, and it's quite encouraging. But I think there's the scope for improvement for the Korean market is still quite substantial. There's quite a huge room for them to improve. For instance, if you're looking for the foreign investors or the capitals, having a compelling return, they're also wanting to a market which make them feel that the risk is manageable. They want the transparent information about the corporate. They want a well-established regulated system to protect the investment. I think these are all the concerns that can be addressed. There's all quite a lot of improvement can be put into the practice. So from this perspective, we have the Korean market authorities, they already having a good start for that, but the market really do want to see more from the first step.
What is the biggest problem in the Korean stock market resulting in the Korea discount, and what changes most urgently needed to address this issue?
Well, I think the Korean discount is not just a term. Actually, you do have quite a lot of numbers to explain why that's happening. If you just purely, for example, looking for the PE ratio, the price versus earning ratio, and the Korean market is actually the second lowest, just above China's stock among all these Asian major economies. But today, the PE ratio in Korea is only 12 times compared to 18 times in Taiwan, about 15 times in Japan, and you not even mention about US is sitting at 23 times. So there's a huge gap of the valuation, which you can say from the perspective is that the equity in Korea has been undervalued. But on the other hand is whether or not that something could be done to enhance the value and get it to be appreciated more by the foreign investors as well as domestic investors as well.
Korea is benchmarking the Japanese stock market to resolve the issues its market is facing. So how would you compare the two countries' initiatives?
I guess there's quite a lot of things in common in terms of they both putting quite a lot of strong emphasis on the improve the corporate governance. But in terms of the really measure action of that, they're slightly different. I think the major difference from my view is one is more for Korean way is more from inside out. The Korean authorities still trust into incentive to activate the initial inside the corporate to help them to making the change they want to. But the Japanese way is more of they seeking for the external forces to push the business to moving towards the global standard or the investors' needs. Which was better? Well, I guess that all the markets have their unique strengths and weakness. It's really hard to say which one works better, but as long as the way that address the concern in the market, building up confidence for the investors, this is the approach that works. If you're looking for the Japanese market, from the performance, the market performance in 2023, even this year, Japanese market has outperformed, not just in the Asian, but also the global space, which really means that all the reform happening in Japan help to restore the confidence for the investors. So I think there's quite a lot the Korean market definitely can do, but in its own unique way, as long as they address the concern the investors they are looking for, and also reshape the image of a Korean capital market at the global stage.
Financial Services Commission Vice Chairman Kim So-young has claimed that Korea's proposal, quote, includes more and much stronger incentives than those rolled out in Japan, end quote. So what are your thoughts on this statement?
I think if you're purely looking, not just compared to Japan, but you purely compare to this time and the one we actually have two past examples, one in 2014, one in 2018, we do see quite a more strong or more comprehensive in the terms that the measures being put into place, put into consideration. So I think the market really hoping for this will be a quite successful try. But again, I think back into the point that each market is unique. All the measures, as long they can address the concern, they can really activate the appetite in the market, the confidence market, it could be the best strategies. It doesn't have to be like a full list of measures or like how strong they put in the paper, but the execution, whether or not they could put into practice, that is the key.
CNBC has reported that Korea's steps are similar to those taken by Japan, but they may not be as successful because Korea has more companies with stronger controlling shareholders than Japan. Would you agree with this view, or why not?
In terms of strong controlling shareholders, yes, this is quite unique in Korean market, but this is not fully absent from the other market. Japanese market also have its own challenge and hurdle as well. Yes, I can understand from the way that it could be a quite issue or hurdle to address, but I also believe in the way that this is not a battle that's unwinnable. It's that as long as that the reform, the authorities can put it into a same ground with all these like major controlling shareholders, because just understand this way, by the end of the day, better valuation for the corporate, a better market structure will benefit them by the end of the day. I think it's a win-win situation. It's not just purely benefit for the investor, for the investment market. It's also a win-win strategy for all these corporates that they could better capitalize the interest from the market and improve their value as well. So I do see quite a lot of common ground which can be built on and making the moving towards the same direction with the corporate's help as well as the authorities' help.
Between Korea and Japan, which would you say is a better market to invest in?
This is a very tricky question. Which one's better? I think better is always a very, very broad word. It just highly depends on what your criteria are. If you're looking for the number point of view, yes, I think Japanese market definitely outperform Korean market this year. They have jumping about 20% so far this year, while Korean market is dropping about 1.2%. In the past 3 and 5 years, Japanese market also outperform. But if you're looking for the potential wise, if we're looking for the fundamental economy point of view, I do see quite a huge potential for the Korean market. Just purely for the economy, for instance, that we are expecting the Korean economy will grow about 2.5% to 3.5%, which will be double the pace in Japanese economy, which only expected to grow about 1%. In terms of population-wise, both nations are seeing a decline population, but Japanese population is dropping even further in a faster pace. In terms of the quality of the population, the Korean's population is relatively younger, which often been better for economy because of stronger demand versus the Japanese market. So at this stage, I do think that we have seen the value of the Japanese market is being quite reasonably valued by the global investors, while in the Korean case, this is probably more of the underdiscovered potential. And it just highly depends on how and to what extent that the Korean stock market could move towards the global standard and reshape its image as an independent and also quite a huge potential that open the door to the global investors' eyes.
Purchases of Korean stocks by foreign investors totaled 15.8 trillion won in the first quarter of the year, which is the highest level since 1998 when authorities started compiling relevant data. And foreign investors continued their buying spree for 5 consecutive months. So in your opinion, what are factors that are leading to this?
Well, I must say it's a very encouraging sign. I think it does showing that the appetite, the global investors are hungry to get into the market. This appetite, which could potentially unlock a huge potential, is quite considerable, I think, for the authorities to think about. What factors? I think there are multiple factors. The strength in the Korean economy definitely is one of the key factors. Technology, innovation-driven business culture are some quite a shining spot. But on the other hand, I think we do seeing quite a rapid shifting landscape in the Asian investment market, because on the one hand, we do having a slowing down economy in China. We seeing some of a relocation of the capitals that moving out from China, but looking for what would be the next best opportunities that capital can sit to explore the opportunities in the Asian economy. And we know that the Asian economy will grow much faster than the Western economies in the next 5 or 10, even 10 years. I think that will be the most appealing point to the global investors.
How did Korea's short selling ban impact foreign investor sentiment? And what ripple effects can we expect should the government decide to maintain the ban beyond the June deadline?
We do seeing the market sort of welcome the move at first at the beginning, but I think the long-term wise, the negative impact of that, which I can say is very much likely will be outpace the positive impact that it can bring. And the simple answer for that is because this is a untraditional way of sort of direct the capital into only one direction, and then you will quite likely to limit the market participation as well as the liquidity, because short selling is also quite a huge source of liquidity for the market. But fundamentally is that you limit the investors to voice what they view about the market, which will ultimately lead to the misprice for the asset. And in the market which we don't have the fully viewed or the as precise as possible pricing for the asset, and also limited liquidation, won't be a healthy market for the investors trying to save their money there, because a market like this will have higher volatilities. Also, that will be very much likely with lower liquidation for the investors if they are trying to getting out of the market. So for the long run, it's definitely not healthy for the market. If we do seeing that this approach being extended beyond June, I think that will largely counter the effort the authority trying to introduce to enhance the capital market in Korea. So I think this is probably not something that global investors want to see.
What is your outlook for Korea's inclusion in the MSCI Developed Markets Index?
Overall, I'm positive for that, but that's with the condition is that these value-up programs can be quite effectively delivered and put into practice. And that's because that if you just looking back in 2014, the reason why Korean market been removed off the watch list for this index is because one, there's no improvement, there's no progress in terms of improvement, and second one is the poor record of the corporate governance. And this value up program just happened to address these two concerns here. So I think that if they can sort of convincingly deliver to address these two concerns, that the chance for Korean to rejoin this index is pretty high.
What sectors are you paying particular attention to within the Korean market?
I must say definitely the technology sector, which is, I think, in the front stage in the Korean economy as well as the capital market. And plus, you have to realize the external environment. This is with the AI rally, with the new technology trend is now sort of quite prevailing. You can definitely see the potential for the Korea's technology sector is definitely yet to be fully valued and appreciated. It's just a simple comparison. If you're looking for instance, Samsung's share prices has dropping about 6% this year versus the TSMC in Taiwan, the share price is jumping about 28%. Well, there's definitely something different in terms of two business, but I think the business environment, the capital environment that the Samsung is operating in is definitely will generate more concerns for the investors. So I'm actually pretty much looking forward to the day that the Korea's technology sector could join as quite a valuable part of the global technology sectors that will attract more eyeballs from the investors.